5 minutes.
Thank you, Mr. Chairman. Thank you, panel, for taking the time to be able to be here. Mr. Bland, certainly appreciate your comments in regards to moving that threshold in terms of banks that are in good order and to be able to move that up. Very proud with Ranking Member Clay to be able to put forward some legislation to be able to achieve that. Would actually like to be able to move into some of the small bank issues, and Mr. Bland might want to be able to address this to you first. Every community banker that visits our office right now testifies before this committee come in and they express concerns about regulations being indiscriminately applied through rule, guidance, or best practice to the entire industry, where in some cases regulation is actually intended for larger institutions. As a regulator, what do you think, do you take into account in determining what is going to be the appropriate regulation to be able to fit the size of a bank?
Representative Tipton, my discussions with bankers, I hear similar issues and concerns that you have raised. And from the OCC, we're very cognizant of that, and we really take an approach that one size does not fit all. And so the approach we take is to look at the activity and whether or not community banks tend to be involved in that. So, for example, we have issued the heightened standards rule that is for our largest institutions. That is not, community banks are not subject to that. The supplementary capital rule was not intended for community banks as well. And so what we take into account when we issue not only rules, but also guidance, we clearly state what is applicable to a community bank and what is not. And then that also translates into our examination processes as well, so that the procedures that drive our supervision of community banks are focused on community banks. So it starts with our ruling, making those determinations. It goes through our examination process.
So trying to be able to tailor regulations to be able to meet it. Yeah, you know, this brings up a point because I wrote down comments. Ms. Everly, you'd stated keenly aware of regs impacts on small community banks. Ms. Hunter, you'd stated you seek out and are listening to feedback on reducing the impacts of regulations and policies. Mr. Bland, reviewing duplicative review processes. Mr. Silberman, mindful and responsive to the impacts of regulations on financial institutions. And we can go down the line, but the problem is this. We are continuing to see rules and regulations that are literally crushing the industry. I come from a small rural community, Southwest Colorado. Just recently visited a community bank in Delta, Colorado, and they said they're about ready to give up. That they're no longer doing the banking business, they're complying with rules and regulations, and the costs are enormous. When we go back to Mr. Ginta's comments, the bank in his state, 22% in terms of the cost. So I guess my question is there any collaboration in terms of trying to be able to streamline, because we're talking about duplicative regulations. When I listened to the comments, I heard you saying the things I would love to be able to hear. But are we seeing this actually happen in practice? Because our institutions continue to see those costs go up. Ms. Everly, you'd cited the stress test. We have Zions Bank, which is basically a collection of community banks, but a regional bank. Their stress test paperwork last year was 7,000 pages. This year was 12,000 pages. How's that paperwork reduction working out?
The stress tests are one area where we didn't have a lot of discretion in the rule writing process because of what was in the statute, and we would welcome more discretion. We've been able to use discretion, for example, in the enhanced prudential standards and the way we look at resolution planning. So we have tailored resolution plans for the smaller institutions versus the larger and more significant expectations for the systemically important financial institutions. But on stress tests, one of the important things I'd tell you there is that when we issued the guidance, we issued it jointly, and we put a statement together that we attached to it that said it did not apply to institutions under $10 billion. And we've continued to do that and put statements of applicability on every financial institution letter that we issuing a rule.
And I appreciate that, and given the concern that you have all expressed in terms of the impacts, particularly on community banks, Do you find it of great concern that apparently only 60% of the Dodd-Frank rules are written and 40% are yet to come? Do we continue to see more piling on? Ms. Hunter, feel free. You look like you want to.
Well, I was looking, we were over time, so that's why I was. No, there are still rules to be written, but the vast majority of the rules that are in process really relate to firms over $50 billion in assets. So I would not anticipate that they would affect community banks in any material way.
I yield back, Mr. Chairman. Thank you.
Chair now recognizes